Hello everybody. So today a bit of a different video. As we witnessed the crash on Friday, correlation tends to get to one. A lot of high growth, high risk, quote unquote high risk, right? Assets that I like, whether it's strategy, whether it's HIMS, whether it's Tesla, even though I don't talk much about Tesla on this channel because of all the hate and anybody who talks about Tesla gets, but there's a lot of like top stocks that are highly correlated and they all fall together. And so the theme of this video really is to try to talk about 4 stocks that may not look as correlated, or at least in my view are just not as correlated to the rest of the market, and that are also very cheap or cheap enough. And so I have 4 stocks I want to talk about today, and they may be worth a look, right? And it's SharkNinja, Caspi, TideWater, and gambling.com. So let's get started. Let's discuss SharkNinja. I think it's my first time discussing SharkNinja on the channel. This one is a very surprising one, and of course, only in a video about something totally uncorrelated would I be telling you about a company that makes kitchenware, right? So it's actually a pretty recent company in that space. They were founded in 2008. They've grown very fast, and this is like all of the stuff that they do. You may have heard of their products, right? Vacuum cleaners and blenders and pressure cookers, all sorts of like kitchen and houseware, house instruments. Typically inexpensive, right? Much cheaper than say a Dyson product or anything like that, but still more expensive than your no brand item, and kind of replacing kind of the legacy American brands. Like if I think of a legacy American brand of vacuum cleaner, maybe like a Kirby or something like that, they're kind of trying to replace all of these very, very old brand, and they're creating this interesting brand. Very good at marketing. Marketing is very present online, on TV, in stores, and so it's interesting because it's not going to be correlated to a lot of stuff. Maybe trade. Maybe this one is going to be correlated to trade. But they actually pride themselves in having a very resilient supply chain. You can see they manufacture in Asia, obviously, but they have all sorts of countries in Asia: Vietnam, Indonesia, Malaysia. Vietnam being like a big deal for people outsourcing from China. Very close to China, Thailand. So they manufacture over there, and the growth of their revenue has been pretty darn good, if you ask me, growing at 21% CAGR since 2008. And you're talking about a company that operates in the physical world with factory, with shipping. So again, my goal to talk about this company is it uncorrelated? Well, it seems a little bit uncorrelated. If I look at the performance year to date, up 15%, right? So I'm much more comfortable with that than a lot of stocks that have run 100% since the beginning of a year. If you actually look at the long-term performance of SharkNinja since they went public in August of 2023, so 2 years, right? And their performance was actually 107% for both years, right? So annualized ARR was 107%. So that has to be one of the best performing stocks of the past 2 years. Total returns in 2 years was 327%. So the fact that I still find the stock cheap in my spreadsheet at a 0.34 is actually quite interesting, and this is inexpensive, considering, say, the well-known nature of the brand. If you were to talk about, I don't know, like take similar brands that are popular among today's households, that are going to be famous, they're usually going to be more expensive. A brand that comes to mind, different sector, is Kava, for example. Kava or Shake Shack, these brands are through the roof. Well, in the consumer space, it seems like these brands trade at a discount, or at least I don't have a good comparison for it. Forward growth, analysts are saying 18%. So again, not too explosive, but the company has a nearly 50% gross margin, and they have a 13% EBITDA margin. So they are optimized for EBITDA. Not quite at the rule of 40, but with operating leverage, give it a couple years, and they will be at the rule of 40 if they keep growing at this level. So I think it's a very interesting company. And of course, the main reason why I find it interesting is I don't think this is going to trade the same as my top NASDAQ stocks like a Tesla or Nvidia or a strategy. I don't think, and Bitcoin being kind of correlated with a Nasdaq still, I don't think it's going to trade the same way. And I like that because he can bulletproof a portfolio with something uncorrelated. Moving on to another stock, Caspi. So Caspi, I've covered Caspi on the Patreon. I still need to release this video on the main channel. Note the stock is down $8 since I covered it in this video. If you have access to it, Caspi is a stock that I like very much. It's actually among well, there's Mercado Libre and Caspi, among kind of the super app of e-commerce being the first mega trend of, say, the 21st century, the first big mega trend where we started having, very good companies. It's my favorite. Like, I prefer Caspi over Coupang. I prefer Caspi over C Limited. Caspi and Mercado Libre are kind of the two. Caspi is riskier, of course, than Mercado Libre. It's a smaller market, but in this video, I highlight, for example, that the currency in Kazakhstan has been fairly stable compared to the dollar. Like, we haven't had some of the issues, for example, that have happened in South America. If you were to compare currency movements, this company has been growing fast, and in fact, Kaspi in Kazakhstan, from what I understand, is everything. You can get your ID done, you can get your marriage certificate, your marriage license. It's your bank. It's where you shop. It's like the leading app in Kazakhstan. Hence, why the growth is only 20%, because now they've kind of saturated their market, and they are trying to become the super app of Turkey, given that they have been the super app of Kazakhstan. Kaspi is interesting because it used to be a bank. And then they became an e-commerce company. A bank turns e-commerce company. So go riddle with this. I don't really understand how this worked. I suggest, if you're interested in this company, to look at some of the CEO interviews. Seems to be like a very smart guy. The stock has been a little down lately, and this down trajectory of the stock, at least in 2025, has to do with their Turkey uncertainty and the Turkey acquisition. They're going after the Turkish market. They bought a company called Hepsi Burada, which is, kind of, I think it's the top 3. It's not the top 1, but it's the top 3 e-commerce platform in Turkey. They also just bought a bank called Rabobank, which was a European subsidiary that they bought, and they're kind of integrating this. And of course, there's growth pains when you start to go into a new country, and you gotta incorporate and do all of that sort of stuff. And there was some geopolitical tension in Turkey, including a no shopping holiday. So their numbers for Q1 kind of look messed up because Turkey had a big upheaval of the youth and a big no shopping holiday where people were called to boycott shopping. So I don't really know all of these idiosyncrasies. I'm trying to find stocks that could be uncorrelated, and this one, in my view, could definitely be uncorrelated. Enterprise value over gross profit over revenue growth is a 0.17. Rule of 40 is a 92. And I want you to note the EBITDA margin on this one, 72%. This is not a typo. I had to check like 5 times whether that's actually true. That is the gross margin. They are an actual cash machine. They have an actual cash machine. They have had a history, actually, of making so much money. They were giving a 9 to 10% dividend. It looks like there's not going to be a dividend this year because they are investing that money in their growth in Turkey, which I obviously much prefer. I much prefer that than getting a dividend. But that's to tell you kind of this company, the bank heritage, the fintech heritage, made it that they built something extremely profitable at 72%. I don't think there's anything similar in the other e-commerce companies or super app companies. This is much closer to what you would get in like a Visa or an Nvidia type gross EBITDA margin. So it's pretty darn impressive. I like Kaspi very much. I like that the stock is down right now, and I like that I don't think Kazakhstan is going to be correlated with a lot of the things I own. I think it's so isolated. I don't think it's going to be correlated with just about anything. So I like that. That's the goal of this video, right? Let's talk about TideWater. And you may tell me TideWater is going to be correlated to oil. Well, except oil has kind of acted like a stable coin lately. So TideWater is I don't know what to do with this one. It's very interesting. What I find the most interesting about it is it's Uncorrelation. So it's a company that hasn't been doing too bad. It's up, 7 times. It's up 600% over the past 5 years. The stock has dropped quite a bit since 2024. Surprisingly, right? Because we are supposed to be in a drill environment. And so maybe this is why actually the stock is down, because the main thesis of this stock is that a lot of banks have stopped loaning money to ship operators to build new ship. A lot of shipyards have actually gone out of business. They don't build new ships, and that was because of the green push. And so this company was in a very interesting situation. By the way, I didn't tell you what they do. They're an oil servicer. So they service oil companies. So they have specialty vessels that handle offshore platforms and all sorts of oil servicing company, and depositing the crew on the platform, picking back up the crew, and they do this worldwide, and they have top customers in the oil and gas business everywhere worldwide in all continents, and they are the biggest ship operator, ship service company that helps that has vessels that helps the oil operator. They are actually the biggest in their field, by a wide margin. So they're the biggest, and they have the newer ships. They have the more specialized ships. So they got a lot of things going for them, and part of that thesis when the stock kind of ran a lot in early 2024 was, there's a lot of shipyards. They're not building the ships anymore. The cost of these ships, the cost per day was going up. Right, they were able to charge much more. And so maybe right now the stock is down because people are anticipating, I guess they're going to build new ships. I don't really know. What I like about this one is that it is indeed uncorrelated. The EBITDA margin is 33%. The forward revenue growth is 19%. They may have a runway to continue growing at this speed. You get an enterprise value over gross profit over revenue growth of 0.21 and a rule of 40 of 50. The stock seems like it could be having a flat-ish year in 2025, but that is not what the analysts tell me. When I look at the analyst number, the analysts are still telling me that they're gonna grow about 20% in 2025. So we yet to be determined, yet to be seen. But the company is EBITDA margin profitable. The company has growing revenue. They're actually targeting a 41% EBITDA margin. I don't know why I have it at 33. So it might be even much more cash making. What they say doesn't coincide with the average, the quarterly average. I use the past 4 quarters here. Anyways, the numbers look good. The stock looks cheap. The stock is down 50%. The big question, as always, for me, when I look at this stock and this stock that I don't own, the big question is, do I want to be invested in oil and gas? There's actually a lot of stigma with the vessel companies, typically more shipping, like cargo shipping, offshore shipping companies. There's a lot of stigma with these companies. They kind of have a bad reputation. They were known, a few years back, they were known for paying 20-30% dividends and then being driven down to zero. So I think there's a lot of investors who don't want to touch them for these reasons. I myself, ask myself this big question mark: do I want to invest in oil in the surface of it? No, not really. I don't think it's something of a long-term future, but in the short term, it seems like they could be doing fairly well. And if you look at the annual return of TideWater, the annual return past 5 years, you can see we're at 49%. Almost 50, let's call it 50% average annual return each year. The stock was more than 7x over a 5-year period. So this stock has been doing very well despite being in a sector with a lot of headwinds, especially during the 2020 to 2025 period. Right, think about that. 2020, you had a lot of headwinds in the oil industry, right? Because it was the events of 2020 who the oil price even went negative, right? So anyways, interesting to see how this company could do in a quote-unquote drill environment. They could do very well. And the last stock I want to talk about is gambling.com. Again, keeping with the theme, uncorrelated with my top stocks, uncorrelated with HIMS, uncorrelated with strategy, nothing to do with it, right? We're talking about vacuum cleaner and blenders. We're talking about e-commerce in a tiny country below Russia. We're talking about oil and gas and specifically vessels. And now we are talking about a gambling you know, affiliate program, a gambling affiliate program, I guess is what I'm gonna call it. This is the way they describe their business. You'll understand right away what I mean by that. For example, NerdWallet, what do? They rank financial institutions, and they own websites like Bankrate, for example, if you want to know your mortgage, or NerdWallet to get to know the best credit card. Booking kind of does the same thing. Booking, especially popular in Europe, right? They do the same thing with reviews. Oh, leave me a review on Booking, and they do their ranking of hotels and hospitality. Well, gambling.com is kind of the same business, and they operate websites just like booking.com and hotels.com, right? They own hotels.com. They own a bunch of websites. Booking owns a bunch of websites. And these websites sometimes are branded, like they're country specific. Same as NerdWallet with personal finance. But they're doing this for gamblers. And so they operate a lot of websites. Bonus Finder, gambling.com. But they have other websites. I do not gamble. I live in a state, too, where gambling is not a thing. Therefore, I can't tell you much about gambling, but I know gambling is very big. Is very big. And so this is a lot of the companies that they partner with. And so I assume whenever someone is looking for a best bonus, they end up on a website that's branded by gambling.com that like does comparisons, etc., etc. And if you go to their investor presentation, they have a chart. Like they have like a specific website for every state that they operate, and you know, like Maryland gambling or whatever, California gambling or whatever, they operate a specific website, and they have a bunch of these state specific comparison websites that help gamblers pick where they're going to gamble online or in person, and they do the same for sports betting. So they help gamblers kind of identify which gambling site is going to have the best payout, the best odds, right? So they're a little bit of a data provider too. They are a subscription business. That is interesting. They have a subscription business for, I guess, on the other hand, you have the enterprise solution. So a lot of media companies, sport betting operator, they want to know what's going on with their competition. And so with the odds and the trading and everything that's going on with the competition, so they have a API and they have enterprise subscription services. And then they also have consumer subscription services. So I'm assuming Odds Jam, for example, I'm assuming that's that's probably an odd comparison website. And so if you're a professional gambler and you want to bet on, I don't know, a baseball game or whatever, maybe you have a subscription to Odds Jam, and out of like the 5 betting sites you have an account on, you will know which betting site is going to have the best odds for the specific bet that you want to place, and you will place that bet on that one website and not on another website. So you don't have gambling exposure in this. Like you don't have the legal risk, or you only have indirect legal risk, because gambling is one of these industries which kind of like healthcare often gets new rules placed, right? And so states sometimes legalize it, but states sometimes put new rules in place that could hurt the business. This company is not exposed to that. This company is diversified. It is more like a NerdWallet that's going to compare the best websites for you, just like NerdWallet compares the best personal loans for you. And so I find that a very interesting positioning. Again, not correlated to just about anything. Not correlated. Anyways, as a marketing company, they have a 32% EBITDA margin. So that's really good. Gross margin is 95%. Of course, it's just a website. It's pure profit, pure affiliate payments, right? That's all it is. Pure, pay per click. You click on the odds website, and they send you to the next website, and you sign up. Well, I don't know how much money they get, but probably 10, 20, maybe $30, and that's commissions, that's fees, that's what they earn. So 95% gross margin. The R&D is probably pretty limited on a company like this. I didn't look, so don't hold me to that. But anyways, forward growth estimated by analysts to be 21%. Enterprise value over gross profit over revenue growth is 0.15. Rule of 40 is 53. You can see the company has a history of growing revenue nicely over the past 5 years, and they are adjusted EBITDA profitable, and they have new customers, and their customers, new customers that they send to different platforms keep increasing. So that's a growth company. That's a profitable company. it hasn't done much in the past year. Yeah, in the past year and a half, it hasn't done much. Yeah, plus 13%. Okay, it hasn't done much. So, and probably the reason why it hasn't done much is because, oh, recession bad, oh, gambling bad. I don't know if you saw the last few days. There's like Las Vegas trending on X saying nobody's gambling anymore. So that probably doesn't help your stock price if you live in an environment where people say, oh, nobody's gambling anymore. But I think it's a very interesting play, and of course, like the 4 stocks in this video, what makes it particularly interesting to me is that I don't really see much of a correlation with anything on this one, and so it's interesting. Small cap though, and again, a lot of these are, this is a mid cap, this is a mid cap. This one is a small cap, so be careful with this one too. Small caps can have bigger swings. So, anyways. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.